Hey everyone and welcome back. Today we're doing a deep dive on Coca-Cola.
Ooh, exciting.
Yeah, I figured most people watching this channel are at least a little bit curious about Coca-Cola as an investment.
Oh, for sure.
But we're going to go beyond just a quick glance at the stock price.
Yeah.
We've got some background info from Wikipedia, some financial data, and we even dug into some of their acquisition history.
Wow, you really went all out.
We'll see if it's a refreshing addition to your portfolio or if it's gone a bit flat.
I love that.
So, to kick things off, did you know that Coca-Cola actually started as a temperance drink?
A temperance drink. Really?
Yeah, back in 1886.
Wow, it's going way back.
And get this, it wasn't just a drink.
Oh,
It was marketed as a patent medicine by its creator, this guy John Pemberton, down in Atlanta, Georgia.
interesting.
What's even more interesting is that the original recipe actually included coca leaves and cola nuts.
Wow, so it really was Coca-Cola.
Right. It's a pretty wild journey from those early days to the global brand that we all know today.
It really is. It's amazing to see how much it's evolved.
Yeah, speaking of that evolution, we can't forget the guy who really put Coca-Cola on the map, Asa Griggs Candler.
Oh, absolutely. He was the one who bought the rights and really saw the potential.
Right, and think about that iconic contour bottle. That design came about in 1915, and it's recognized all over the world.
You're right. It's so distinctive. People say you could recognize it even in the dark.
Exactly. It's a testament to the power of good branding.
For sure. But even a giant like Coca-Cola has had its missteps along the way.
Oh yeah, for sure. What comes to mind?
Well, how can we forget New Coke?
Oh, the infamous New Coke.
Yeah,
Yeah.
that whole saga was a major lesson in brand loyalty.
It shows what can happen when you try to mess with a classic.
Definitely, people don't like change when it comes to their favorite drinks.
No, they do not.
Yeah.
But let's shift gears a bit and talk about where Coca-Cola stands today.
Okay, sounds good.
They're a huge global company, right? I mean, they sell their products in over 200 countries.
That's right, they're everywhere.
And get this, back in 2013, consumers were downing over 1.8 billion servings every single day.
Wow, that's mind-blowing. It really shows you the sheer scale of their operation.
It really does.
Yeah.
And all that market reach is obviously translated into some pretty impressive financial figures.
It has. They're consistently ranked on the Fortune 500 list, and this year they came in at number 94.
Nice. And according to Interbrand, they're the sixth most valuable brand worldwide.
So they're clearly doing something right.
It seems like it. But here's where things get a little interesting. Our data from Zacks shows Coca-Cola with an F rating for historical EPS growth.
That is interesting. It means their earnings per share haven't been growing as strongly as they have in the past.
Right, and that's something that definitely raises some eyebrows, right?
It does. There could be a lot of factors at play, maybe increased competition in the beverage industry or changing consumer preferences.
Definitely something to consider when thinking about their future growth. So we've got this huge global presence and a really strong brand, but then there's this F rating that kind of throws a wrench into things.
Yeah, it makes you wonder what they're doing to address it. Right. Like, are they just sitting back and letting things happen, or are they actively trying to maintain their position and adapt to these changing market dynamics?
Well, they're definitely not just sitting still.
Good to hear.
Back in 2012, they actually announced this massive $30 billion global investment plan.
Wow. That's a serious chunk of change.
It is, and it signals that they're committed to growth.
So they're putting their money where their mouth is.
Exactly. And it looks like they're focused on diversifying their offerings beyond just those classic sugary sodas.
Makes sense. The market's changing. People are looking for healthier options, and they got to keep up.
Right, and that brings us to their acquisition strategy, which is a whole other topic.
Oh, yeah, the acquisitions. They've been busy snapping up brands left and right. I mean, there's Minute Maid, Thumbs Up, Barks, Inca Cola. The list goes on and on. It's not just random, though. There's a definite method to what they're doing.
Okay, break it down for me.
Think about it. They've got Odwalla, Fuse Beverage, Glacio, Honest Tea, even Topo Chico and Costa Coffee.
Wow, you're right. It's like they're covering all their bases.
Exactly. Juices, teas, sports drinks, bottled water, and even coffee.
So it's like a we've got all your thirst needs covered kind of strategy.
Exactly. They're diversifying to capture a wider range of consumer preferences.
Smart move. If someone's not reaching for a Coke, they might be grabbing a Minute Maid or a bottle of Smart Water instead.
Right. It helps them mitigate risk and adapt to those evolving consumer trends we were talking about.
Definitely a good way to stay ahead of the curve. But here's something that really surprised me.
What's up?
Their acquisitions haven't always been limited to just beverages.
Oh, you mean like their foray into the entertainment world?
Yeah, with Columbia Pictures back in 1982. I mean, that seems so out there for a beverage company.
It does seem a little random, doesn't it? But remember, this was the 80s.
True, things were a bit wild back then.
Companies were trying all sorts of things, diversifying into all these different industries.
So they were trying to find synergies and leverage their distribution network.
Exactly. They figured, hey, we're already delivering Coke all over the place. Why not movies too?
It was a bold move for sure.
It was, but it didn't really pan out the way they'd hoped.
I know, right? They ended up selling Columbia Pictures to Sony in 1989.
Yeah, but I guess it just goes to show that they're not afraid to think outside the box.
It definitely does, even if that box turns out to be a Hollywood studio.
Ah, exactly.
But before we get too carried away with all this talk of expansion and acquisitions, let's talk about something that's become really important to a lot of investors these days.
You mean ESG factors?
Exactly. Environmental, social, and governance practices. How does Coca-Cola stack up in that area?
That's a great question, and it's something that more and more investors are paying attention to.
Yeah, it's not just about profits anymore.
Right. And honestly, Coca-Cola has faced some pretty serious criticism, especially when it comes to plastic pollution.
Yeah, I've heard about that.
In fact, back in 2019, they were named the world's biggest plastic polluter.
Wow, that's a big deal.
It is. It's a serious issue that they need to address.
Are they doing anything about it?
They say they are. They've made some commitments to using more reusable packaging and incorporating more recycled materials into their bottles.
That's a start, I guess.
It is, but it remains to be seen if those efforts will be enough to satisfy investors who really prioritize ESG.
Yeah, it's one thing to make promises, but it's another to actually follow through and make a real impact.
Absolutely. Actions speak louder than words.
So it sounds like there's a lot to consider when it comes to Coca-Cola.
Definitely. There are some strong points and some potential downsides.
I'm already starting to feel a little overwhelmed.
Well, let's take a quick break and come back to unpack some of this a bit more. We'll dive into the pros and cons of owning Coca-Cola stock, and we'll also take a closer look at their dividend policy and share buyback program.
Sounds good to me. We'll be right back after this quick break.
Okay, so we've looked at a lot of different factors.
Yeah, we've covered their history, their financials, their market dominance, their acquisitions.
But the big question is Coca-Cola a good fit for your portfolio?
That's what we're trying to figure out, right?
Exactly.
And to do that, we need to weigh the pros and the cons.
Okay, so let's start with the positives.
All right, on the plus side, Coca-Cola is a global powerhouse.
Absolutely. They have incredible brand recognition.
Like, almost everyone in the world knows what Coca-Cola is,
Exactly. And that provides a level of stability.
which a lot of investors find really attractive.
Especially in uncertain times, people want to invest in companies they know and trust.
Makes sense. And for income-focused investors, there's another big plus.
Their dividend, right?
Yes. Coca-Cola is actually considered a dividend king,
Because they've consistently increased their dividend payments for over 50 years.
which is a pretty remarkable track record.
It really is. It shows they're committed to rewarding their shareholders.
And we can't forget about their share buyback program either.
Oh, right. Share buybacks.
Yeah, those can actually boost earnings per share.
And potentially increase the value of existing shares.
But how does that actually work? I'm not really sure I understand the mechanics of it.
Sure. So basically, when a company buys back its own shares, it's reducing the number of outstanding shares in the market.
Okay.
And when there are fewer shares available, the earnings are divided among a smaller pool.
Which makes each share more valuable.
Exactly. It's a way for companies to return value to their shareholders.
So it's like they're saying, hey, we believe in our company, so we're investing in ourselves.
Exactly. It can be a good sign.
Okay, so we've got the global brand recognition, the dividend, the share buybacks,
All good things.
but we can't ignore that F rating from Zacks for historical EPS growth.
Right. That's definitely a yellow flag.
It suggests that there might be some challenges ahead in terms of future growth.
Yeah, the beverage industry is constantly changing.
What do you mean?
Well, consumer preferences are shifting.
Towards healthier options, you mean?
Exactly. People are more health conscious than ever before.
And they're looking for alternatives to sugary drinks,
Right.
which puts Coca-Cola in a tough spot.
It does, but their diversification strategy is a step in the right direction.
With all those acquisitions of brands like Minute Maid and Topo Chico.
Exactly. But even with that, they're facing some stiff competition in those newer markets.
Yeah, there are a lot of other companies out there vying for those same health-conscious consumers.
Exactly. It's not an easy game.
And then there's the whole issue of sugar consumption and its impact on health.
Right. That's a major concern for a lot of people.
And then, of course, there's the elephant in the room, their environmental impact.
especially when it comes to plastic pollution.
They were named the world's biggest plastic polluter back in 2019.
Yeah, that's not a good look.
And it's something that a lot of investors are taking very seriously these days.
Absolutely. ESG considerations are becoming increasingly important.
So how do you weigh all these factors?
That's the million-dollar question, isn't it?
It feels like
You have to look at your own investment goals and your risk tolerance.
are you someone who prioritizes steady income and stability,
Or are you looking for higher growth potential?
even if that comes with more risk?
Exactly.
And how much do ESG considerations factor into your decision-making?
It's all about finding the right balance for you.
Okay, that makes sense. But there's one more thing I wanted to touch on before we move on.
What's that?
Coca-Cola's economic impact.
Oh, right. It's not just about their investors.
No, they have this massive global network of bottlers and distributors
Creating jobs all over the world.
and contributing to local economies.
The ripple effect.
So their influence extends far beyond just their financial performance.
Absolutely. It's something to keep in mind.
All right, so we've talked about the pros and cons, and we've touched on their economic impact.
What's next?
Well, I think it's time to look at their valuation.
Okay, sounds good.
How does Coca-Cola measure up when it comes to their stock price?
Let's see. Zacks provides some interesting data.
Lay it on me.
Their price-cash flow ratio is 9.57.
Okay, and what does that mean in plain English?
Basically, you're paying $9.57 for every $1 of cash flow that the company generates.
That sounds a little high to me.
Well, it's all relative.
What do you mean?
A lower price-cash flow ratio is generally considered more favorable.
Because you're getting more cash flow for your investment?
Right, but you have to compare it to the industry average.
And to Coca-Cola's historical performance.
Exactly, to get a better sense of whether it's a good deal or not.
Right, so context is key.
Always.
Okay, what about their price-sales ratio?
That one's sitting at 21.93.
Meaning?
You'd be paying $21.93 for every $1 of sales.
Okay, so again, we need to compare this to industry benchmarks and past performance.
Exactly, to see if it's within an acceptable range.
Got it.
Oh, and there's one more metric we should look at. Their earnings yield.
Earnings yield. What's that?
It's basically how much profit you're getting for every dollar you invest in the company.
Okay, and what's Coca-Cola's earnings yield?
It's currently at 5.81%.
So is that good or bad?
Generally, a higher earnings yield is more attractive to investors.
Because you're getting more bang for your buck.
Exactly.
So we've got these three valuation metrics: price cash flow, price sales, and earnings yield.
And each one gives you a slightly different perspective.
On whether Coca-Cola is overvalued, undervalued, or fairly priced.
Right. It's like looking at the company through different lenses.
And remember, valuation is just one piece of the puzzle.
You have to consider all the factors we've discussed.
Their history, their financials, their market share, their innovation, ESG considerations, and of course, your own personal investment goals.
It's a lot to take in, but it's important to do your due diligence.
So is Coca-Cola a die?
That's for you to decide. We've given you the information, now it's up to you to make an informed decision.
All right, fair enough. But I think we've covered just about everything there is to cover.
I think so too.
So what's the final verdict?
Well, Coca-Cola is a complete company with a long and interesting history.
They have some undeniable strengths.
Like their global brand recognition and their massive distribution network.
But they also face some significant challenges.
The shift towards healthier beverages, concerns about their environmental impact.
It's a mixed bag for sure.
Investing is all about weighing the potential rewards against the potential risks.
And with Coca-Cola, there's plenty of both.
Ultimately, the decision of whether or not to invest is a personal one.
Based on your individual circumstances and investment goals.
Exactly. There's no right or wrong answer.
Well said. We've explored Coca-Cola from its humble beginnings as a temperance drink to its current status as a global beverage giant.
We've looked at their financials, their strategic moves, their controversies, and their efforts to adapt to a changing world.
Hopefully this deep dive has given you the information and insights you need to make an informed decision.
About whether or not Coca-Cola deserves a spot in your portfolio,
We'd love to hear your thoughts.
head over to the comment section on YouTube and let us know what you think.
Would you invest in Coca-Cola? Or are you looking for a different kind of fizz in your portfolio?
And while you're there, don't forget to subscribe to our channel for more deep dives into fascinating companies and industries.
Let us know what you'd like us to explore next.
Until then, happy investing.
So we've covered a ton about Coca-Cola today.
Yeah, it's been a pretty deep dive.
Their history, financials, market dominance, those acquisitions.
Their controversies, too.
Oh, yeah, we definitely didn't shy away from that.
And how they're adapting to a world that's, like, constantly changing.
Right. It's like they're trying to stay ahead of all these consumer trends and, global
Oh, it's
issues.
that whole plastic pollution thing.
Yeah, that's a big one.
Yeah.
But before we wrap things up completely,
Okay.
wanted to circle back to their acquisition of Columbia Pictures for a second.
Oh, yeah, that one still kind of throws me for a loop.
It seems so random, right? Like, what does a beverage company know about running a Hollywood studio?
It's definitely not their core business.
So, like, what was the strategy there?
Well, it was the 80s, right?
Yeah, true. A lot of big corporations were diversifying like crazy back then.
Trying to create those synergies and leverage their existing networks.
Exactly. They thought, hey, we're already delivering Coke all over the country. Why not movies, too?
It's almost like they just couldn't resist dipping their toes into Hollywood.
It was a bold move, for sure.
But it didn't really work out, did it?
Not really, no. They sold it to Sony just a few years later.
But it's still an interesting part of their history, you know?
It shows they're willing to experiment,
Yeah, and take risks.
even if they don't always pay off.
Exactly. All right, so big question.
Hit me.
Based on everything we've talked about today,
Yeah?
is Coca-Cola a company you would personally invest in?
Ooh, that's a tough one.
I know, right? I'm still on the fence myself.
Well, as an analyst, I got to stay impartial,
No, I get it.
But I will say this. Coca-Cola is a complex company. They have a ton of history,
Like over a century of it.
and they have some serious strengths.
That global brand recognition.
They're a huge distribution network,
Yeah.
but they also have some big challenges to overcome.
Like those shifting consumer preferences.
People wanting healthier options.
And those concerns about their environmental impact.
It's a lot to weigh, right?
It is. Investing is all about balancing those potential rewards against the risks.
And with Coca-Cola, there's definitely a bit of both,
Ultimately, the decision of whether or not to invest is up to you.
based on your own personal situation, your risk tolerance, and your investment goals.
We can't tell you what to do.
But hopefully, this deep dive has given you the info you need to make an informed decision,
Yeah, that's what we're here for.
to provide you with insights and analysis.
And help you navigate the complex world of investing.
So what do you think? Head over to the comments section on YouTube and let us know.
Yeah, we want to hear from you. Would you invest in Coca-Cola?
Or are you looking for something a little different?
And while you're there, don't forget to subscribe to our channel.
We've got tons of deep dives on all sorts of companies and industries.
Let us know what you want us to explore next.